Well, good morning. I'm David Combe with the CBS AM Debrief. It's Tuesday, the 8th of March, just coming up on 8:30 a.m. And once again, it's oil that's dominating the overall theme here in the markets. The US indices were all down as oil topped $105 per barrel. The other thing that pulled things down a bit was some of the downgrades in the tech sector. And so this pulled the Nasdaq down by 1.4%. So all eyes sort of continue to be on this oil space and the contagion in North Africa, or if it will become a contagion, more so than it already is. And of course we've got the Day of Rage scheduled, I believe it's March 11th in Saudi. So that could really be the tipping point, I guess, for where we're going to go from here. And, clearly the markets don't like it. It's probably not a bad time to be considering squaring up positions and saying it might be sensible just to be in more cash here than anything else. But of course that assumes that things do go that way rather than the other way around, in which case probably be thinking the opposite. Let's take a look at the actual numbers here. So the Dow down nearly 80 points, or 0.66%. S&P 500 down 0.83. Of course, we had a pretty bad run yesterday. I'll get to that in a minute. Canada down 1.13. Mexico down 0.83, and Brazil down 0.2. So all red there. In Europe, Milan and Stockholm were the only rises. Looks like worst down last night was the CAC down 0.74. Moving down to our region, yesterday's closed down 66, or 1.37%. Pretty bad showing there. Hang Seng down 0.41, and the Nikkei actually down a little bit more than ours, 1.76, or 188 points, down to 10,505. We'll take a look at the local futures, suggesting a little bit of a recovery rally there on the Nikkei, up 50 points. Hang Seng at this stage undecided, and the SPY here down a further 24 points. I'd expect that we may see that number might begin to push up when the actual index opens, but have to remain to be seen. Now to the commodities space. As mentioned, crude here at the moment at 104.96, just shy of 105. Natural gas putting in a pretty good showing here, up 3%. For natural gas warrant holders, we're probably getting back up towards break even on that, so a little bit of patience. Hopefully we'll see that, clients get rewarded on that one. Now to our soft commodities. Just going to scan through these, looking for standouts. Coffee up 3.06%, quite a big move there. Wheat down 3.78%. Sugar fairly steady. Lumber and oats both down a little over 1%. Rough rice, fairly big move there, 1.73%. And wool at $12.13. Doesn't seem that long ago that was had a 10 and an 11 in front of it. Copper, 4.35. It's a reasonably big move last night, 13.50 now. Guess would be that these high crude prices will put a crimp on global growth if they hold that level. So perhaps seeing a little bit of cooling off there. That doesn't put aside the fact that we've had this structural supply-demand issue. So on the supply side, that is unlikely to change. Demand side, of course, we'll have to wait and see, but I know Jono was pretty keen on accumulating copper around 420 on dips to that sort of level, so maybe that's one to watch out for. Gold, 14.32, up $3.80, and silver at 36, up 0.753, or 2.13%. Now to our currency pairs. Euro buying 1.3973 US dollars. So it looks like we've had a bit of US dollar strength here overnight. The pound buying 1.6202, and the US dollar buying 82.2565 yen, and the Aussie buying 1.0110 US dollars. US dollar buying 97.29 Canadian and 0.9263 Swiss francs. Okay, let's have a look at the economic calendar. Make sure we've got that on the right week. Okay, so here we are for Tuesday. We've had, we have some Japanese trade balance data out. Forecast is 371 billion yen. Previous was 768, so not looking for a particularly good number there. So it'll be interesting to see what happens there. Got NAB business conditions out here locally at 11:30. Then some unemployment data out of Switzerland, and that is about it until we hit the Canadian housing data early tomorrow morning. So not too much in data here, so not expecting any real surprises. So we can move on to just have a quick look in the Falcon Trader and then wind things up. And I was just looking here at our local index, the ASX S&P 200, and seeing here that we've got a potential rule of 4 sort of scenario coming up to the upside, but we're probably over that to this downside. And concern is that we do see this situation in the Middle East and North Africa continue. I know that the rebels now in Libya are being attacked by the Libyan Air Force. That really does start to become a bit of a game changer there. So we're in for a protracted civil war perhaps, and the concerns that brings with it. And where does that leave us here on the index? Well, greater risk to the downside right now, I'm thinking. So 4,500 looks like a possibility, and perhaps a little bit less so down around 42. Of course, if we do get some upside lift, then we will break through this level of resistance on the high side that goes back to late 2008. I'll move on to one that I have been mentioning a number of times, which is St Barbara. I'm watching that one fairly closely, and I'm happy to say that yesterday it put in quite a good little run. And for those of you that got on board, should be stretch that out a bit. Should be pretty happy with the results there, getting in around just over $2 and now up to $2.22. Anything else to look at here? Just a quick rundown. Probably another gold stock which seems to have been my focus lately, which is Medusa. I've certainly been on the radar with the VectorVest system that I talk about from time to time, and that has had a nice little run up here from $7 when I think I mentioned it Tuesday, Thursday of last week. I'm not doing my usual slot. So expect resistance back up around this 760 level, but if you've gotten on board that's a reasonably handy 8 to 10% move there. Okay, so I'm going to try and leave things reasonably short today, and therefore I'm going to say goodbye and good luck, and till Thursday when I'm usually back on. All the best, and bye for now.